What's up, guys? This is Omar Best of How to Be a Stock Market Player, and welcome to the fourth episode of What If You Had Invested. And today's featured company will be Procter and Gamble Incorporated. Their ticker symbol is PG. Once again, their ticker symbol is PG. And this company was founded in 1837 in Cincinnati, Ohio. And yes, I said that right. This company was founded before the Civil War. That means the company has been around for almost 200 years. And if a company has been around for almost 200 years, then they got to be doing something right. Okay? This company is responsible for a host of consumer brands. Tampax, they're responsible for Tampax. They're responsible for Tide, which is the washing detergent. They're responsible for Febreze. They're responsible for Gillette shaving products. They're responsible for Scope, the mouthwash. They're responsible for Crest, the toothpaste. I could go on and on and on about how many products they have in their product or brand portfolio. This company in 2011, they had over $82 billion in sales, which is amazing. And if it sounds like I'm being a little biased towards Procter and Gamble, it is because I am biased towards Procter and Gamble. Procter and Gamble is the epitome of a company that you should invest in. Number one, they have been around for 200 years, so they know what the hell they're doing. You can't be around for 200 years unless you're doing something right, okay? So yes, this is a company that I would definitely invest in. Another point, they control the supply chain. If you're not familiar with what the supply chain is, it's a business term. Supply chain is basically how the products flow from the manufacturer to the consumer. Okay? So the supply chain looks like this. It has the manufacturer on top. They're the ones who produce the product. Then you have the wholesalers. They're the ones who distribute the product amongst all of the different retailers. And then you have the retailers who distribute the products to the end user. They sell the products to the end user. So let me put this into perspective. If Procter and Gamble was to tell a major retailer like Walgreens, like Target, like Kmart, or whoever, if they were to say that, you know what, we don't want to carry any of our products in your stores no more, that retailer would be doing whatever they have to do to get Procter and Gamble to keep their products in that store. Why? Because if they stop selling certain products in their stores, they will lose customers. Customers will stop going in there. People, I used to manage a retail store. I've seen it up close and personal. If you don't have certain products in your store, people will drop everything that they've had in their basket and leave your store because sometimes they're just coming in for that one product. That one product. Okay? I've seen it happen up close and personal. So believe me, Procter and Gamble has control of the supply chain, which is a major leverage point. Enough of that. Let's move forward to the stock price. The stock price 10 years before was $89.34. That was in 2002 of June 7th. And pay close attention to the asterisk that I have there, the star that I have next door to the price. I will explain that later. And the current stock price is $62.99. That was the closing price in 2002, 10 years later. So you're saying, wait a minute, Omar, I lost money. But let me explain. Let me explain. In 2004, there was a 2-for-1 stock split. So this means that for every share that you had owned is now worth 2 shares. So if you bought 10 shares in 2002, in 2004 when the stock split occurred, you now have 20 shares. So you invested in 10 shares, but now you have 20 shares. So you also had stock dividends. This is another component that I will start adding to the What If You Invested episodes. This is a component that I've left out in other episodes, but I will start adding this component in. There were also dividends paid out over the last 10 years that amounted to $218. So, your actual return, if you bought 10 shares of Procter& and Gamble for $89.34, then your return, if you were to sell right now, your return would be around $583. And this includes your stock splits and your dividend payments totaling about $218. So that computes to about a 65% return, 65% gain on your initial investment, and around a little over 5% return annually, your annual percentage return annually on your initial investment. People, if you do not have, if you don't quite understand what stock splits are, I will include a link to explain what stock splits are and why they occur. So do not worry about that. There is a link below. If you're watching this in YouTube, there should be a link within the description box that will take you to the explanation of what stock splits are. People, this concludes the fourth episode of What If You Invested. This is Omar Best. If you're looking at this in YouTube, please subscribe to our channel. Leave comments. If you're listening to this in SoundCloud, leave comments, subscribe. Let us know what you think. Hope that you enjoyed this episode and stay tuned for the next one. Peace.